Welcome back to Ferocious Education. This is Zed. Today we're going to be talking about Qrtea. The company goes as Qurate Retail Incorporation. Today we're going to go towards due diligence, technical analysis, and what I think about the stock. So without further ado, let's jump right into this one. So Qurate Retail Incorporation. So they own and operate 7 leading retail brands in the United States, including QVC, HSN, Zully, Ballard Design, Frontgate, Garnet Hill, and Grandin Road, collectively. And throughout their subsidiaries, they provide 22 million consumers with a third way to shop via television programs, streaming services, social media platforms, and mobile applications. So what we're going to do here is dive a little bit into their earnings and some of their presentations that they did provide us before. So first off that we're going to do here is the Dutch Bank 2021 Leveraged Finance Conference. And then we're going to dive towards the next earnings, or the latest earnings actually, which would be around Q2 2021. So basically in this one, they have their CFO and some other people. Mainly I'm interested in the CFO. Qurate Retail Group. So you basically have world's largest video commerce platform as QVC with around 16.4 million customers at a revenue of around $11.8 billion. Now you still have Zully, which is $1.7 billion in revenue and 5.6 million customers. And you have corner store brands basically that give you $1.2 billion in revenue and 2.3 million customers. Now the key takeaways here is that the pandemic accelerated the shift toward digital lifestyle and virtual experience, and Qurate Retail is well positioned to win in the new normal. Distinctive scale and differentiated experience and loyal customer base, successfully evolving to digitally driven, personalized, and durable video streaming model. And they continue to acquire and develop and retain high value customers. And what you're seeing here is they're confident in sustaining significant long-term revenue, adjusted OIBDA, and free cash flow. And so here the pandemic again is accelerating the shift toward digital move, and they're talking about that in terms of frequencies, high frequency items per existing customers. That hasn't changed over the last 4 years, almost half a decade. In terms of high value spend per existing customers, that again didn't change as much, and the loyalty didn't change as much. So they've been kind of stable in the last half of a decade. And in terms of other numbers you're able to see here, in terms of the first purchase online for new customers, that has increased a little bit. Now, this honestly, in terms of bar diagram, is a little bit misleading in that sense, in my own opinion, because it does show 79 and 89. It looks like it's double, while it's not. 79 and 89 is only 10% difference. It is merely somewhere around almost like 5% difference. So it's not that much big difference that they're showing here. So you got to be very careful onto diagrams when people are showing you that. In terms of their customer counts, year-on-year comparative, what you're seeing is that they have a total of around 4% increase in terms of their total or their number of customer growth. Even though a lot of the world has experienced lockdowns and stuff in 2020, it's still surprising to see 2021 to only be around 4% increase. We're going to dive towards their earnings and whatnot. But in terms of the newest launches, you have things on YouTube, Vizo, Smartcast, TiVo, Sling TV, Google Play Store, Android TVs, and that is some of their newest launches that they're going for. And in terms of progress on QVC network optimization, so streaming fulfillment and distribution capabilities, Lancaster Fulfillment Center fully decommissioned and sold to third parties. So they had a business there, they divested from it. And New Bethlehem Fulfillment Center fully operated and preparing to handle HSN brand products, and started the decommission process for Ronke Fulfillment Center and sold/marketing 2 former customer service representing office buildings. So you're able to see what directions they're going for. And some of their key highlights that I'm going to go here and then move on to something else. They have around 218 plus million homes via broad distribution of direct to consumer access and 16.4 million customers that they have. more than 140 plus hours of live content delivered daily via 14 TV networks and OTT digital platforms, with around $11.8 billion in revenue and $2.2 billion in adjusted OIBDA, and a strong customer demand and viewership gains across multiple platforms, acceleration of digital trends, and a 99% retention rate across existing and best customers. They're also continuing a multi-year trend, and they generated around $1.2 billion of free cash flow, representing 55% conversion from an adjusted OIBDA, and they anticipate 45 to 55% in terms of free cash flow conversion from adjusted OIBDA each year. Their covenant leverage is around 1.9 times as of the 30th of mid-year 2021. And maintain around a 2.5 times target leverage or better for QVC is currently the conservative financial policy that they're trying to go for, and shareholder actions funded by free cash flow. Now, they do have some more information about here, things like proving investors relations, investors in analytics, and a lot of other things that we can go through, but I do want to see here if there's any more information we can kind of go on for the key highlights. So in terms of Q2 2021, some of their key highlights was, in their own opinion, an encouraging Q2 2021 results in terms of sustained growth on top of 2020 performance, and continue to expand and innovate digital ecosystems, and experienced unit volume growth and increased spend per customers at Q times H. And they also repurchased around 5.9 million shares for around $74 million from May 1st through July 31st, 2021, and increased the remaining repurchase authorization to approximately $780 million. So what they're doing here is lowering basically the float by repurchasing a lot of that shares. Currently, the entire shares outstanding is around that's 400 million shares multiplied by 10, almost 4 billion. So what they're trying to do is take a bit more than 10%, almost 20% of the entire shares outstandings back into the private or repurchase program, so they kind of taking it back. Anyway, before we move on forward, if you would like to see more contents like this, make sure to click the subscribe button on the bottom right corner and leave notifications on for this channel. Also, don't forget to drop a like if you've actually enjoyed this video so far, and please consider joining our Discord totally free in the description below. Now, in terms of price over book and all that kind of fundamentals, price over book is 1.14, so it's deeply undervalued compared to the SP 500. In terms of price over sales, it's 0.29. Each of these are around 5 and 4 for the SP 500, so it's deeply undervalued when you're looking into the SP 500. Price over earnings is around 3.10, and price over cash flow is 2.81. These numbers don't look that bad at all. Now, if we want to take a look into their entire kind of total current assets, we're able to see that their current assets doubled from 2016 to 2018 and currently are stable. So we're not seeing much of a 5-year trend in terms of total assets. In terms of the total cash, we see an increase from 2020 compared to 2019, and we kind of see every 2 years or so there is a bit of an increase, as you get to see 300, 300, 600, 600, 800, anticipating for 2021 will also be 800 for cash and short-term investments. In terms of net, so intangibles net, that's been a massive decrease as we go through the years. And in terms of the total assets in general, that has actually been really flat, actually a bit decreased on 2020. Really has been flat and no growth in terms of the assets itself. Now, the total equity has been stable in the last 3 years, and so what we're talking about here is it appears that there's not of a strong growth that we're seeing here. And total revenues in the last 3 years have all been around 14 million, or 14 billion, my bad. It's kind of almost on the same line, so nothing really significant there. 2016, 2017 were also around the same, and we've seen a jump between 2017 and 2018. Now, in terms of the overall net income, we see a bit of a difference here. In 2020, it looks all right, but we're only basically back to 2017 as we get to see. And so the numbers itself aren't looking like a continuous growth, but a little bit going back and forth. In terms of diluted normalized EPS, 2020 was one of their best years. But again, looking back, it was 0.72 and then 1.73. So there was a good amount and then a massive dip in around 2019 and 2020. They kind of revived back. So it's definitely interesting. It's not kind of a stable trajectory that we're seeing growth in, and I get to see why some people are hesitant with this one. Now, in terms of the institutional buyers, we do see some far-right action for significant institutional buyers that we're seeing here. Nothing that kind of stands out from big names, but nonetheless, a lot of activities coming in from ETFs and trust funds in general as a collection. In terms of insiders, I don't see any significant selling action that would be alarming. Basically, the selling you're getting is just portions that these people are usually awarded as a part of their collective contract agreement. And in terms of short selling, we're not seeing a lot of activity. However, so this one here is the institutional put/call ratios, and we're seeing that there's high values indicating a higher degree of shorting, and we're currently getting that ratio to be 8. So institutions are definitely looking a lot more bearish to this one than bullish. From a technical analysis perspective, we do have some interesting things. So on the moving averages, what we're seeing is the 200 SMA is above the 50 SMA, and the 30 EMA is above the 10 SMA. So all these really indicate more of a bearish action. On the average directional index, we're seeing that a value of 20.54, which is basically more sloppy than anything, and the William %R is sitting in neutral, so neither overbought or oversold, and the MACD and the volumes momentums, is showing very much of a sloppy no action in either direction. I'll explain a little bit further. So stochastic fast and stochastic slow both are somewhere in the middle. Both are actually dipping a little bit downwards, telling you to be careful because the volume and momentum appears to be downward. We're seeing that as well with the moving average bands, where it's expecting to trade between 1145 on the top and 937 on the bottom, but it's going downwards and decreasing by the day. On Fibonacci retracements, we're able to see some supports and resistances. We're currently seeing a support at 1018, below there 882, 745, and 575. Resistances are 1214 and 1462. And some basically price line actions of supports, we're able to see a significant support at the 1027, and then the 998, going downwards to the 952, and then to the 909, and then 865, 818, going downwards to the 789, and then 747, and then downwards to the 696, 649, and down to the 615. In terms of resistances, we're able to see a bunch such as the 1057, 1121, 1148, going upwards to 1224, around 1266, 1339, and then up to 1382 and 1418. Now, another thing we need to take a look at is basically the current trend that this one is forming. So this one has been forming for the longest time, currently a negative trend that we're seeing. It basically is trying to break it on the top, and that's a good thing. But let me try to explain to you a bit what happened in the recent time, especially around August. So we're able to see around August, we've seen a little bit of a push onto this one. Specifically around August 31st, we see this candle. And the main thing that happened here, where this one slid, wasn't really majorly about news. There was around a $2 dividend that was announced earlier, I believe mid-August, so around 20th of August or so. And it basically said that the record date is going to be 31st of August, around here. And there's an ex-dividend rate date. So anyone that really wanted to get that dividend of $2 per share ended up buying on the 27th of August, and that kind of got pushed long over from anywhere from around $10.80 all the way to around $11.14. And then they started selling a little bit after on the 1st of September. And that's where it went from $11.18 to a bottom of $10.91. And then from there, people just continued on selling, but they were mainly going on for the dividends. You got to be very careful here. Currently, it's accumulating, and that's a good thing. But what we're seeing is a lack of growth. It's basically stagnant. It looks like the best case scenario that we can get is similar revenues. EBITDA improved in 2020. And they mentioned that that was part of going on towards digitalization and going towards a digital lifestyle. But we got to be very careful here because it's very tricky to take a look into this one and say, yes, we see it as a growth stock. So that's very important. Now, what do you think about this ticker? Make sure to mention down in the comments below. Just subscribe and like, and have a wonderful day. Now, if you're still here on this video, make sure to drop down below and join our Discord. We have a lot of different things going on, including, for instance, members that gives picks for free. It's not pump and dumps, we just things we think about, swings, etc. We also have really exciting bots. You can actually use those ones. For instance, we're just testing out this bot, for instance, that gives you Fibonacci resistance points, activities, etc. And we have a bunch of free things, totally free. We run on tips here, and you can ask me questions, suggest stocks, etc. It's a really nice community that has been growing up very fast at a very good rate, and it's totally free. If you would like to join that one, feel free to do so in the description below, and have a wonderful day.